288 on the 10-year yield and falling. Almost got to the top end of the range yesterday on a good ISM number. So for all those of your friends that have been freaking out about Trump destroying the U.S. economy with whatever it is he's doing, which I don't particularly care what he's doing, and don't want to know what he's doing. The ISM number, unfortunately for that narrative, hit a peak cycle number of 61.3 yesterday. Now, that's not new, being in the 60s, particularly on new orders. It's only been about 19 or 20 months in a row. Okay, so that's, don't forget that Hedgeye's view of U.S. growth accelerating for 8 quarters definitely mattered. And the bounce that we had in the ISM was what had bond yields up yesterday, but they're falling again this morning. We'll see how the ISM services number comes out. I think that's coming out in my Canadian accent tomorrow. Bond yields in Greece are up, bond yields in Brazil are up. You haven't heard about any of that on Old Wall TV, and thank God for that. What else do I got? I got to thank God. I mean, if you don't keep these people gainfully employed, all the better. This morning, I think Steve Leisman and the woman from the Financial Times were explaining macro to the poor people that still have that off mute. And I'll take some questions.
That's good. Another point on that ISM data release from yesterday, and obviously it's holding above 60, and it's been pretty good. That's a diffusion index. All the European data that we showed too, that PMIs, that's a diffusion index. You see a lot of green sequentially from last month, but I think the point we would make there is just like if you actually look at, you really have to kind of smooth out those series to see what's going on.
Yeah.
So that's coming off of 60. So if a lot of 60s were the peak several months ago, all the data is now rolling off, and so you're bouncing off of 55, but that's down from 60.
Yeah.
So that's an important point. I mean, if you actually just look at those data series, they jump all over the place. So you kind of have to read between the lines a little bit.
Yeah.
And with ISM, I think the point we're making is just, that stuff has held above 60. So you haven't really seen the deceleration at all.
So if you look at something like Ben said, PMIs or ISMs, these are surveys where, as I pointed out, the shark line, if you will. Remember that from back in the old beginning of Hedgeye days? We used to call it the shark line. Now some people call, there's the black line, which is inside information. There's the shark line, which I made up. So that's this thing that's like this. So when you break below 50 on these two kinds of numbers, ISMs or PMIs, that is considered contractionary or recessionary in an economy. However you want to define it, it's just not good, particularly if you're coming from a green state, which is pretty much anywhere in here, these dots, which Ben's talking about. Anywhere around the world, I mean, with the highs being kind of in the low to mid 60s, 60 or greater, and then if you get, God forbid, you get into the 40s, if you're like 40-something, 45 on a PMI or an ISM, basically, the shark has eaten you, okay? You are crushed, okay? This is where all the risk lives, all these big, I don't know, I can't draw a damn shark, but they're all under there. So this is what a diffusion index does. It basically oscillates between 45 and 65. When it's 65, it can only get worse. When it's 45, it can only get better. It's called mean reversion. So again, that's the whole point on the global divergences call that we started making at the beginning of the year, or the global cycle peak calls, is that a lot of these numbers, particularly Latin American, European, and Chinese numbers, have nowhere to go but down. And all the U.S. is doing is treading water, pardon the pun, in the very happy space, like kind of up in here, which we would acknowledge, and I did yesterday in a note, you'd acknowledge anything that's treading around in here as much better than being long something that's down in here. Effectively, that's why, because the U.S. on the ISM numbers looks dramatically better than things in China, Europe, and Latin America, and that's why, because you're long of the USA against all that slowing stuff, you're killing it, as opposed to getting eaten and getting killed, and then telling your clients, but it's cheap, okay? I could tell you that if you watch a surfer get eaten, the leg of the surfer get eaten, the valuation of that surfer would probably go down. But that's maybe a very nasty image. But it's happened many times to surfers. I mean, if you do get eaten, you will not be a good surfer.